Good morning, everyone. Weekly update of the dollar, gold, Bitcoin, crude oil, Wednesday, September 24, 8:24 a.m. Eastern Time. I'm Rich Powers for Critical Point. U.S. dollar index probably level one bottom. I think we made an alert last week for it. Still didn't write it down on the chart here. I believe it's heading higher into the week of September 29th and may not top out to the week of November 3rd is the best forecast. That's just a process of how long it may take them to buy enough of the dollar, or that the news changes to suddenly stop them from buying, okay, causing them to say, wait a minute, I don't want to do that any longer. Little wishy-washy on where the level three, the monthly buy-sell signals. There was one last week, obviously, but can it top this week? And the answer is yes. And so it may actually be going down in next week. But we got this, it's so quiet right in here, not so much on the lows and highs, the spread of the week, but the candlestick bodies are so quiet. By the end of the week, they got it right back to where they started the week. It's like it's just nonsense noise during the week. So it's very, very quiet, very low volatility. It's building potential up for something that might be big someday. But for the moment, it acts like it's just dead in the water, So I can't really help you there for the level threes. It could go either way when I look out to next week, following week. But I do think the bias, though, is the larger move is up. So therefore, the level threes ought to have more upside than downside. Weekly indicators on the buy side spreading with the favorite indicator after a buy signal. That's a bullish sign, and it's just suggesting it ought to go up, and the model's already been saying it ought to go up for the US dollar. Let's go to the gold market, and on the gold market, of course, lively, wild, crazy. Could very well put in the highest price for the rest of this decade. We may even have to wait the next decade for record highs. And yet, with all the Trump wild craziness, maybe we're going to see the longest bull market ever in gold on a business cycle perspective. But I don't know. But I am bullish the gold market. The model's bullish the gold market into the week of October 27th, into the week of November 24th for a level one top. And if that is a level one top, then any level one top now into the first half of next year, maybe only the first quarter of next year, that can create minor, mid-sized, even major long-term tops, meaning maybe as important as a once-a-decade sell signal in gold. In the meantime, the trend is up. For all I know, it's going to $4,000. This is a futures chart of that. Now, we look at this weekly chart. It is trying to roll over for a sell signal while it's rallying. It is overbought. So there's some problems there. This isn't as good as it looks, but I suspect it's still going to move up anyways, okay? And here again, the level threes just turned a little bit weird, wonky. I don't know if I can really help you on it. My guess is that it ought to be down next week and then up again. But for all I know, it just wants to go up, 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 up and away and go into that level one top. All right, let's go to Bitcoin. Bitcoin should put in a once a month buy signal. It could have been last month or last week and it didn't work, so it ought to be putting it in this week. It ought to be going higher into next week. That may be a sign it's willing to follow the stock market higher, but the stock market's probably going to struggle higher. So I got a feeling maybe Bitcoin's going to struggle higher. I don't think it really wants to go to a record high. I think we did the right thing of flipping these around all the way back to there, coming up with a different pattern. I think it just wants to kind of coast higher into level two, then down, and it just doesn't seem to really have the push, the force behind it, the demand for Bitcoin. So I don't trust it, but it ought to be higher next week, maybe pull back higher again. It ought to generally try to go higher in level two and then down. I think what it's going to do is try to be higher into December, Jan, Feb. That might be in line with the stock market. Then Jan, Feb, March, I think it could come down quite a bit maybe. That might be in line with the stock market. But I can also see the correlation is slipping here. It's kind of doing its own thing, and it seems to be a little bit lazy. Long-term wise, I'm still bullish in 27 probably for Bitcoin, but I can see 26 being a go-nowhere year even, and then bullish in 27. I doubt it's going to be an outright bearish year in 26. I think that'll be kind of similar to what I'm looking at for the stock market. Crude oil, calling a level one bottom in place. I should remember to put alert there. I think you can trade this higher, and we need to put this out here like this. And I also need to double check with the model, make sure we've got that somewhat accurate. And I'm going to start using less and less labels here. I don't think I need to prove the accuracy to many people. I realize for newcomers, they probably want more history of what's going on. But any rate, I think it's going higher. Actually, I just did that wrong. That's not the level 2 we want. We actually want a level 1. So I'm just going to steal this one way over here, and I'm going to put that there, and then I'm going to shrink that down like that. So the market should go into level 1 and level 2 tops. There will be a level 3 top to coincide with it, but there's many level 3s. So and then I think they should pull it back in the level 2, up for level 2, back probably for level 1. That's just a standard structure. It can throw in an extra level 2 once in a while and extend to level 1, blah, blah, blah. But I think what this market really wants to do is work higher into summer of next year, or at least higher in towards May, spring months, as they buy ahead of time for the summer driving season. I think if the economy can hang in there and the lower interest rates help and we don't fall apart in the economy, and it doesn't have to be a great economy, it doesn't have to be a great stock market, but if we can hang in there, I think the oil market is going to say, okay, we want just a little more money, even though we know we got a lot of supply. We want a little more money. They're going to put the price up anyways, okay? I don't think it's going up by huge amounts. I don't think it's going to be a great bull market, but I see commodity indexes going up. Even equal weighted indexes, meaning it's not just the oil market. There ought to be a lot of other markets. And then in the grain markets, we can have a crop problem that's only shows up like every 80, 90 years. We can have a crop problem in 26 and or 27 that could be major, serious. Big up moving grains that would probably push the commodity indexes up quite a bit. But I think the other commodities can catch on board too. And if we can stop raising tariffs, adding new tariffs, and we just leave them alone, and then we can stomach the inflation jump from those tariffs and get past that hurdle. We'll get used to those higher prices. We'll still print money. We'll still have okay interest rates, okay, and life will go on, okay? And that can allow these commodities to just have a little better breathing room and hopefully get back to actually trading more products around the world and improve the import-export picture such that the commodities can actually perk up, even though we leave those tariffs in place and we're spending that extra money, you and I, at the consumer level, okay? Any rate, and I can see how that can prop up oil as well. So I think the commodities indexes could be a nice little investment going into next year. I don't know if it'll be as profitable as the stock market. It could even be more profitable than the stock market, but I don't want to push that idea, okay? And I think that some of these individual commodities have a little more push to the upside than say the commodity indexes. And yes, this could add to inflation, but I think the inflation we need to worry about is on the services side and then on the middleman all the way to the store of the commodity side, not the producer type inflation. They could use a little help here, a little higher prices to help them out compared to their input cost and inflation, okay, and what they're producing. So I think it can all work out for us. But we also want to consider we could have surging inflation later this decade, and it may wait to 27 or later. But I think I can see it moving higher now into next year on into 2027. We'll probably have higher interest rates to go with it eventually. But the moment, probably interest rates are going to be sideways to lower into the end of the year, early next, especially with the Federal Reserve lowering. The Federal Reserve is erring on the side, helping out the economy and not slowing down, even though it may help perk up inflation. A little later, it's going to err on the side of, well, let's not worry about the economy getting hurt. Let's worry more about the inflation getting bad. That's later going to hurt the economy. Okay, and they'll probably swing the other way, and they might yet tick interest rates higher next year, the Federal Reserve, okay? They may get in a mood where they know they have to be more flexible in what they would want. They would like to have interest rates in a certain direction or certain levels for years and then move them, okay? They're much slower and trend following. They want to be late doing things to make sure it's the right thing to do because really their job is just to protect us from a disaster. But it's also their job to have a good economy too. So this is where they're caught between a rock and a hard place here, where they have to help out and improve some things, make things better here, okay? So here's the monthly chart of oil. And what we have is it's coming off major once a decade sell signals of oil back in 2022 down into just a minor long-term bottom relative to the kitchen business cycle, which you can look it up online. Even Wikipedia does a pretty good job explaining it. It was in economist Schumpeter's model when his smallest business cycle was the kitchen. He then went to the juggler business cycle. It's more of a decade, once a decade buy, sell signal kind of thing. Then he went to, I think, a 25, 27, 30, something like that, probably the Kuznets. It might have been the Clement cycle. And then he went to the Kondratiev cycle, where I think Schumpeter made some mistakes and I made some improvements, is when it comes to the stock market economy, it's really not the Kondratiev. The Kondratiev works maybe on the tops, the high side, the inflationary types, but on the deflation, the bottoms of the stock market on a very long-term basis, it's really more of a 36-year cycle, not a 54, okay? Or it's a 72, okay? You can go that way with it. At any rate, what we have here is with this index, this green box, we can extend it out forever for all I care. What it means is it's dirt cheap. But the problem is we can extend that green box all the way down to zero if we want. And I do think later this decade with a recession, we may see $35 oil or something like that. But right at the moment, this has been working very well. Look at what Saudi Arabia, OPEC has been doing right in there. You can just see they're saying, gosh, this is just too cheap. Okay, and I know some of those Middle East people read some of my stuff. I know China reads some of my stuff. I wish they'd send me a check and pay me, okay? At any rate, I think once we see oil trade above 78.40, we know it's in a long-term bull market, probably into next year and maybe even into 2027. And we may yet see some $85, $95 oil. But I see it a long ways out, and it doesn't really have to work that way. It could be in a range here from 90 to 50 for a few years to several years yet. We got a lot of supply of oil out there. Now, the government quite a while ago said things should start getting tighter now in oil. I am behind that, even though the government sends me weekly updates. I'm behind the studying. I don't know if that's really true or not. I think another thing to consider, if it starts trading above $70, you have to consider, yeah, it's starting to go higher into next year, following year, but getting up towards 80 would be the proof we need. Now, that could be way too late for you for buying, investing, hedging, trying to protect yourself, stuff like that. I don't know. But at any rate, that's what we're looking at for the oil market. Now, this is the Goldman Sachs Commodity Index. This is a standard index. I prefer the equal weighted, which I don't think I'll show you. I have to go find another list of them. But I think ultimately this index starts going above 600. It ought to go higher. We might see a 32% up move from the lowest price there going into 26, 27. I think that's worth considering. All right, here's the dollar monthly. Okay, and I think the dollar can move down to 94 into a long-term bottom early next year. All right. But it doesn't have to really go down that low, and it doesn't have to stop there. It can go lower than that. It depends on all the Trump stuff, that there's a lot of wild cards there, okay? But we put that bottom end, then I would think the dollar is going to be higher later in 26, 27. That may have something to do with rising interest rates along with rising inflation. Now, if the Fed is caught and they don't dare raise interest rates, that could actually cause the dollar to go down, betting on the higher inflation, because normally people say we have inflation when the dollar's down. Well, the dollar doesn't really cause the inflation. It's just mimicking and trying to go along with inflation and respect that, but it does it in an inverse correlation normally, okay? But interest rates are still probably the more important thing. Now, let's go to the Bitcoin market. And the Bitcoin, this is monthly, and it looks like to me it should go higher into 26 and then down. It might go higher into 27, but I'm not convinced it can stay up as long as the stock market. The stock market probably could stay up into 27, but I'm not convinced the stock market just goes nonstop higher into 27, and there will be level 1, level 2, level 3 sell signals along the way, fluctuations, gyrations that can be stalling out. I'm a little concerned the stock market stalls out for 26. That might actually help bring down Bitcoin in 26, or at least stall it out. So we've got that. And there is a long-term bottom to about the same time as long-term top to cause some confusion late in 26 on into early 27 for the Bitcoin. This is the gold market. I believe this is the futures, and this is that bull market. Unbelievable. Okay. I was trying to buy gold in here, got frustrated with it, finally gave up on it, went on with just more and more stock market stuff. but I wish I'd had some fun. I sat here and do this analysis, and sometimes, I'm not invested in everything. And I can feel so right on that and saying, boy, I wish I made real money out of that instead of just having the joy of being right. Okay, any rate, we're due for a long, major, once a decade sell signal in gold now into probably April of next year. So do keep that in mind. That doesn't mean bad times for the economy. It just means we get a high enough price that we become comfortable enough saying we don't need to buy gold to protect us from bad times anymore. We got enough gold for that. What else are we going to do? Okay, and there's nothing wrong with just selling our stocks. So then what the hell do you need to protect anything for? Okay, so why do you need to buy gold? I am definitely not a gold person, okay? I don't see the sense or use of it really. But I think right today, I think it's probably still better than, say, Bitcoin and cryptocurrencies. I see a less use of those things, but I like tracking, following. I might yet get back in and play with some of the Bitcoin because I think my model does very well for that kind of thing. Okay, this is the Bloomberg Dollar Fund. I don't do enough analysis with this. I think this is a neat fund. And you can also go to Stook.com, Stooq.com. Any of you want free charting? They got a nice little free charting. It's over in Poland, so there's Polish English or language there and stuff. But they have some nice charts there, and they even have some fundamental data like CPI inflation and PMI. They've added some nice things there. But they have their own dollar index, okay? It's something interesting to look at. At any rate, even with the Bloomberg, this is actually a fund of the Bloomberg, and it's the bullish fund of the dollar index. And, it's just saying it's probably just going to coast a long-term bottom and rally. Yeah, I think we got a higher dollar latter half 26 into 27 perhaps. And I think that's going to coincide with rising inflation, rising interest rates. But for the moment, inflation might not bother us for the rest of this year. And it's probably the Fed's going to keep the interest rates down a little bit for the rest of this year. All right, I think that wraps up this week's discussion. Past results are not necessarily indicative of future results. Please send people to criticalpointpod.com. I'm going to put this one up for free today. And, tell them check it out and sign up. 60-day free trial, cancel anytime they want. They stay with me 60 days. They're going to want to stay the rest of this decade because we got a lot of rock and roll, wild, crazy stuff, good, bad. And hopefully we can make money out of the good and the bad. All right. Have a great day, great week. Thank you very much.